Hey, what's up guys? Note Investor here. Wowzers, there's just no way to say it. The market, the red across the board, the carnage that we have seen here this week has just been unprecedented. And right now, crypto traders, crypto investors are shell-shocked at some of the prices that we saw yesterday and today at some of these extreme volatile times. The lows, the prices that we've been seeing here are just, shocking. There's just no other way to say it. People have, if you would have told me even a week ago that after the price of Bitcoin had come down from 10K to 8K to 6K, that it would have been a good short trade, I would have called you crazy. Nobody, I tell you, nobody expected to see $4,000 Bitcoin in March of 2020. There's people now suddenly coming out of the woodworks claiming, oh, I told you so, but let's be real, people. Yes, anything is possible, but nobody was expecting this. And it's not just a crypto story, as I've been saying. If you've caught the live streams, you've been in tune with some of this, and you know my thoughts on the broader economy and all that, and it's not just a crypto story. This is a mass panic across the global financial scene. This is a liquidity crisis. This is a sell at all costs. There's no buyers in sights. And so you're seeing just the dump, the massive selling, the panic, the pressure. If you look at the stock market here, go into, on the left here is the S&P 500 ETF, and on the right is the diamonds, the Dow, basically proxy, right? So just the velocity of the move that we have seen here has just caught so many people off guard. And you know, I really feel for those that were really close to retirement, those that were saving and that were being diligent and just kind of watching the stock market go up. And we all knew that it was due for a pullback. We all knew that this was probably in the late innings and at any time it was going to start to roll over. But even this, the velocity at which it finally just collapsed has been unprecedented. You know, we saw yesterday was the biggest down day ever for the European stock markets in many of those cases. And we saw volumes spiking to crazy levels. The amount of liquidity and money being printed and injected into the markets is just crazy. I mean, it just dwarfs what we've already seen during the financial crisis. Just yesterday, $500 billion plugged into the repo markets. And the repo markets, by the way, have been in trouble since September. It's been an interesting phenomenon to be watching, because why was the Fed needing to pump so much money into the system when stocks were hitting all-time highs and everything was peachy? And now it's kind of coming home to roost here. And, you know, they're talking about trillions of dollars, and wow, right? And just look at the S&P 500. The move here has taken it back essentially to those crazy lows that we were watching at the end of 2018, early 2019 during the big tech crash there. And just in a matter of weeks has not given any long-term investors hardly any time to prepare or to mitigate any of this. They were just caught off guard, and now people are going to get their end of month, end of quarter statements, and they're going to be shocked. They're just going to see the damage that has been done. And you look at the Dow Jones here on the right, massive drop now, largely due to Boeing. Boeing is a big component of the Dow and has a lot of weight and just has been getting hammered, and it's taken the Dow back to 2017, June of 2017, just completely erasing the last 2+ years of bull market action in one fell swoop. It's just amazing to see some of the damage that is being done. And if you really zoom out and you look at the pump Trump that started in November of 2016 after the surprise victory election here, it's right here. That's the big candle that started the big rally. Trump has been, you know, and regardless of which side of the aisle you sit on or if you even care, you know, Trump has been a big, you know, claim to why the bull market started, and, you know, the business enthusiasm that came in after he won the election and all that stuff. It just kind of kicked off this massive rally. And look at this, just having erased most of that on the Dow. Now it's back to June 17 and another 10-15%. And it's essentially erased the entire move. And just crazy to see this stuff. Go into the total crypto market cap here. This is just the view for the month of March. This is just the month. This is the hourly chart, of course, so it's very granular, but this is the monthly view, which is just basically 13 days. It's Friday the 13th here as I record this. And just watching the total crypto market cap drop from that 250s, give or take, down very quickly. We saw a massive spike here about a week ago. This was on the back of OPEC not coming up with a deal, Russia walking away, the oil markets tanking, bond prices spiking. We triggered circuit breakers in the US stock market at the open the following day, and Bitcoin was taking a big hit overnight. And little did we know that that was not it. I mean, that was a massive, surprising drop, spike at the bottom after already having pulled back from 10K Bitcoin down to 8K, and then it was just a quick spike. Little did anybody suspect that we'd see another 70, 80 plus billion dollars erased very quickly. And at the lows yesterday, I mean, the total crypto market cap, not Bitcoin, the total crypto market cap had already fallen close to that $100 billion mark from being at 260 just a week ago. And just really puts things into perspective at how quickly things can change, and largely due to the lack of liquidity in many cases for a lot of these names, a lot of these exchanges. And of course, we don't have circuit breakers in the crypto space, so things can just keep dropping infinitum. And we're seeing that here is just crazy. Right now, as we stand, the crypto market cap's at $142 billion. And on the right here, I have the BTC dominance chart. Now, this is interesting because some of these bigger cap names are starting to bounce here a little bit today. And again, it's way too early to say that was the low. I'm going to share my thoughts here shortly on where do I think things are going next, bigger picture perspective. But looking at the BTC dominance here, is it finally starting to roll over again? Is it going to bounce higher? 67 was what I was looking for, maybe 68. We've hit that 66 and change percentage mark here a few times, and it looks like it's pulling back, and largely because of some of the bigger cap. Remember, the BTC dominance is going to be heavily influenced by, you know, those top 5, top 10 names in the market cap ranks, and that includes XRP, ETH, Litecoin, EOS, BNB, those type of names, Bitcoin Cash, right? And so you're seeing ETH, or excuse me, XRP and Stellar, XLM, bounce here a little bit versus Bitcoin. So that's kind of putting the pause here, but it's going to be interesting to see if we start to see this pull back and the alts start leading the way up here. So let's take a look at some of these numbers here and deep dive this here some bit more. Now, of course, looking at the bot status and all that, it's been short for quite some time, and it has just been right, very right lately in terms of calling these short trades and going flat here, and just, you know, tremendous move down here recently. Nobody expected that, but I'm still in shock when I talk about the prices. When I start looking at charts and I start looking at, okay, what's the next resistance, what's the next support? The fact that we're talking 5K is just crazy, just shocking still. The fact that we're even talking about this in March of 2020. And I know a lot of people feel this way. Looking at the Slack comments, and some of you guys, shell-shocked is the way to say it. I mean, it was unprecedented. A lot of people were caught off guard. Normally, yes, it would have made sense to buy some of those extreme oversold conditions, buy the dips, and some of you guys have felt the pain of doing that, and in some cases, liquidations have happened because of leverage and all that stuff, and that's just the nature of where we are at right now. So looking at the daily chart here, this is the BTC on Coinbase Exchange here. There's important to note that we saw probably the highest volume, if not one of the highest volumes ever, yesterday and this morning on some of these daily charts. Certainly on Binance and some of those newer exchanges, it was absolutely the highest volume ever. On some of these older ones, it competes with the parabolic volume that we saw here near the highs in 2017, as well as some of the climactic lows that we saw here in late 18. Last year, during the peak around 14,000 Bitcoin, it was very tremendous volume. There's a lot of selling that happened right above that 13K mark, and you're seeing that volume overshadow that one here. And so just extreme volume, and again, just shows that it was full-on liquidation mode, full-on panic selling. All stops were triggered. The mem in the networks was starting to get clogged. People were trying to move coin onto exchanges to likely sell, and it was just slowing everything down. So you were seeing just kind of the domino effect, the waterfall effect, and that's how fast things can move. But if you zoom in here, and if you caught the stream yesterday, I was talking about some potential ways to trade this. I said, you know, you got to zoom in when things are hitting these extremely volatile conditions. The daily charts, the weekly charts, they don't mean anything. And in fact, I would argue, and I said this during the live stream yesterday, I would argue that technical analysis really gets thrown out the window during these times, because you're in no man's land, you're in uncharted territory, and you know, if you start looking at, okay, here's the next support and here's the next resistance, it really doesn't matter. If you look at oversold, overbought conditions, that really doesn't matter, because it's purely a sentiment play, it's purely a momentum trading. You're just looking at the price action at this point, you're looking at reactions to near-term, very, very near-term levels being taken out. And so, for example, we saw this big drop here at the start of the week when it went from the high 7Ks down to 6K and just started to go sideways here. And, you know, the only technical indicator that I've been using lately are just some of these very short-term moving averages, whether it's the 1 hour or 30-minute charts. And you can see here that it was bouncing, and as soon as it broke the lows, I mean, it was just a very quick waterfall to the next level down. And you know, yeah, it would bounce along the way and you see some big quick reactions, but you never knew if it was the low until, it's always hindsight at that point. And then we started finally seeing these crazy, I mean, I was watching the chart real time and it was just, here's 5K and then here's 4K, and we cracked 4K briefly and then just a quick spike up. And the moves are extreme both ways. I mean, you look at the up bounce here, up 50%, right? 50% move in the price of Bitcoin within an hour and a half. Just crazy type of moves. And so just remember, if you're trading this, one, you got to be way quick. You got to look at the much shorter time frames than normal. My normal time frame is daily chart, 4-hour chart. Maybe I'll look at the 1 hour just to kind of time some entries. But right now you're looking at, you know, 30-minute charts and 15-minute charts, that sort of thing, which is typically what I do when I'm trading stocks, which is crazy. So yeah, you're getting these crazy moves, but you have to look at the shorter time frames because you don't normally see these kind of moves in 30 minutes on the price of Bitcoin, right? You don't normally get a down 15% in half an hour and an up, you know, 10, 15, 20% just as quick. And so you certainly have to use those lower time frames. So what that means is you got to use wider stops, bigger profit targets, but you also have to offset that with smaller, much smaller position size to accommodate for the large volatility. Otherwise, if you're thinking, I'm going to trade the market like I normally do back here, when you're expecting these moves to be plus or minus $100, $200, you're just going to get whipsawed all over the place. You just have to accommodate for the much bigger, drastic volatility that you're seeing. And the way you accommodate for that is by using much smaller position sizes. When things are tight like this and you can respond, and look how little this move looks. I mean, at the time, this move was big, right? So this little spike here was, you know, going down from $8,700 down to $8,200 in a handful of hours was a big move. These look really tiny now because of this crazy action down here where you're plus or minus thousands within the hours. And so just keep that in mind. You certainly got to play it tight. And I'm going to just keep harping on the same thing I've been saying lately. If you're messing around with that high leverage trading 100x, 50x, you're just asking for it at that point. It's just crazy to be doing that. The only reason to ever use leverage, in my opinion, is because of a low volatility market where things don't move that much, where, you know, it's only plus or minus a handful of percent every day. Then you use leverage to magnify that move, so that makes trading worthwhile. But when things are moving this crazy, why? You know, why risk so much? You're literally risking to get liquidated and to be closed out here. And I know a lot of people were yesterday. You're looking at the metrics and the trading bots and all that, and just the liquidations were stacking up like crazy, as some of the people couldn't even get out of positions if they wanted to. And it was just unprecedented, just unreal to see it happen real time. And just shell-shocked is the way it feels right now. A lot of people are just kind of waking up going, what in the world just happened? And when you think about it, you put it into perspective, you look at some of the prices that we've seen here in some of these names, we're literally back to 2018 lows. And you know, yesterday during the live stream we were at 6K, and I said, could it go lower? It could, but I said at this point we're in no man's land. And during the live stream yesterday, right, prices were trading around here, and I said there's really nothing down until, you know, 4K. And I mean, is it going to get there? I personally didn't think we'd see 4K yesterday. I was thinking, I mean, it could, but I don't think it's going to happen. And holy moly, just the craziness that happened. Well, you think about that, the prices that we're seeing here. We saw $3,900 at the low. That puts it way back to the low here, the extreme low that we saw at the end of 2018, just completely undoing this entire rally, making a a lower high here and just in one fell swoop, just killing the whole chart. Technically damaged, technically broken. There's just no way around that. Ethereum hit double digits again. Now, granted, on the big picture, Ethereum hasn't been anywhere near the all-time highs of $1,400. Nowhere near it. But if you zoom in and you look at the recent price action, the low that we saw in December around 80 bucks, came really close to that yesterday. Just amazing. Right back to those lows. Litecoin, no love for the Litecoin, hitting $24 at the lows. Wowzers. And you can go on and on. Neo, $5, and just on and on and on. The wreckage, the chaos, even the almighty Link saw a crazy wick down to the lows, but coming off the highs, right, from the $5 mark, hitting, quickly getting cut in half to $2, and just everywhere you look, it was just carnage across the board. No end in sight. But where do we go from here? That's the big question. A lot of people are wondering: is this the end? Is it the low? Is it over? Can we come out of our bunkers? What is going on here? And so I'm just going to share my thoughts. Obviously, let me just be clear. Obviously, nobody knows if that's the low. Nobody knows. I mean, people were telling you the bottom was in 2 weeks ago, right? People said 8K is the low. And then it was 5K, 6K is the low. I mean, nobody knows. I mean, it's impossible to say because we're in an environment where markets are reactive and overly reactive right now to any sort of bad news, any sort of signal that there's going to be more economic recession and chaos. And so if, the pandemic gets worse and things get crazy and governments take extreme measures, then yes, it could continue to go lower. You got to keep that in mind. There's just so many unknowns out there at this time. And so my thought is, personally, the low that we saw here in December or in yesterday that was lining up with the December lows, that's kind of like that's the line in the sand, in my opinion. If it undercuts that, yeah, people are saying, okay, it could go to 2,500 and 1,900. But at that point, like, you got to really start to say, is the bull dead? Is it over at that point? If you look at the log charts, you have this massive spike, obviously the parabolic move, the big drop lower. This is just going to form one big, ugly double top scenario, or it's going to turn into one of those, every high is just going to be lower and lower and lower, right, until things just kind of flatten out and get in a much smaller trading range. And at that point, you're wondering, well, then, yeah, right, are we ever going to see the old all-time highs? And after a move like yesterday, after seeing the carnage, if it doesn't recover very quickly and just is a very anemic bounce to 6K, 7K, and just starts dropping, really puts into question, in light of the halving, in light of everything else, really puts into question whether or not you'd ever see that 20K mark again. And you absolutely have to consider that. Below the December lows, in my opinion, I think it's cooked. I think you are going to go down to 1K or 2K at that point. We're not there yet. We saw some extreme action yesterday, but that's my thought. Now, near term, is it done? Is it the low? I feel like it is, at least for crypto. I feel like the low is in near term, or a low is in near term, because of the climactic action that we saw, the crazy volume that we saw. But we're talking about a really wide range. I mean, price has bounced, that's all relative, bounced back up to 5,100, 5K, and the extreme lows was basically 3,900, 4K. And so anything in between all of that could just be a higher low. If you go back to the 1 hour chart, looking at this, perhaps we set another higher low, we test the lows, and we start just kind of vacillating back and forth like we did in December of 2018, then there's a good chance you can say, yes, the low is in. Personally, that's the camp I'm in. I'm thinking it starts to kind of build a range in and around this level and starts to establish a little bit of low, which ultimately down the road will set up for, a retest of resistance. Now you got to look on the way up. It's going to be all of these near-term levels we were watching just last week, just yesterday, it seems. And so in the longer run, that's going to be the next levels up. 7K, 8K, 9K, those are all going to be the big targets to be watching on the way up. But I think near term, it starts to chop around here, it starts to bounce. Maybe it doesn't go V bottom and just straight back up. I really doubt it would, but maybe this is a low. And I think for crypto, it probably is getting close to the low, but not for the stock markets. I do believe we're due for a bounce. There's going to be some more liquidity injected, but I think the damage is done for the broader economy because of the drastic measures that have been taken, and rightly so. A lot of these had to be taken because people were unsure of what they were dealing with, the fear of the unknown, and I think the damage is done. The travel industry is just wrecked. Hotels, airlines, cruise lines, they're just not going to be able to recover the quarterly loss that they've had. I mean, that's just lost revenue. It's not recoverable. Maybe if this all blows over and in a month from now things get back on track, they'll do good and they'll start to bottom out. But the broader economy is going to feel the reverberations of this impact for quite some time, in my opinion. I think this was large enough of a damage to be done to send the economy into a recession. Even if it's a mild one, it's going into a recession. Probably already is, because the economic activity has just literally come to a grinding halt. And people are not going to travel. They're not going to spend money on big ticket items. You're going to impact real estate prices. You're going to impact travel industry, and just it's going to reverberate. People are going to start getting laid off in those industries, and the damage is done. And typically what that means is it's a little bit of a domino effect. The numbers start coming out in 3 months, 6 months, and the earnings just reflect all the panic and the damage that we've seen here happen in the last month. And that just continues to flow into stock prices, that it continues to affect employment activity and all that stuff. And so I say all that to say, basically, I don't think it's over for the stock market just yet. We could see some big bounces like we saw during the last financial crisis. There were some tremendous bounces after crazy 1,000, 2,000 down days. We saw some massive plus 800 days on the Dow. I think you'll see that again. But if you look back and just zoom out at the bigger picture, I don't think we're done quite yet. I mean, this has been 3 weeks of just chaos, and this week was really marked it all, right, with circuit breakers being triggered and just record-breaking down days and volume and all that. We're due for a little bit of a bounce, but right now I think all bounces are going to be sold into. People are going to take advantage of the bounce, and they're going to start to liquidate and raise capital, and it just starts to feed on itself. And we don't know where the low is or where the bottom is, but we all can agree that we were due for finally a pause after a record-breaking bull market since the lows at the financial crisis here in 2009. It's just been a straight-up move for the most part, and this is a big drop, and it's going to start to signal that that was likely the top. That's my belief, and where the low is anyone's guess at this point, but I don't think it's over yet for the stock market. For crypto, maybe it was the front runner. Maybe it felt most of the damage already. You got to keep the numbers in mind. I mean, the numbers are just brutal here for crypto. I mean, just from last year's highs to the lows, right, down 72%. That lines up well with some of the drastic lows that we saw during the peak here, when you had that first initial drop from the parabolic top to the very quick low in February. It was down 70%. Then it rallied back up to around almost 12K and just grinded all the way down before the climactic low, another down 72%. And we've seen that here play out very quickly, right? Even just from the most recent high that we saw here around 10.5, very quickly down 60+% in no time. And so it just caught a lot of people off guard. So I think, in all cases, we're due for a bounce. I think crypto is probably close to setting a little bit of a near-term low here. But again, the big picture, it's way too soon to say if that was the low, if the 3K level is going to hold. It's just way too early to tell. And so you got to remain cautious. You got to remain cautious all around. So those are my thoughts, guys. I know that this is unprecedented time. People are weary. Just some thoughts to keep in mind as we head into the next week, the next quarter. Just some lessons learned from the last crisis that I've remembered. Some things to keep in mind, right? Things can continue to go lower. I mean, just simply put, if you think prices are oversold, things are too cheap, they can't get any lower, they can. Because if there's a panic, if there's a liquidity crisis, people don't care. It's all about preserving capital and raising cash, and everything could absolutely continue to go lower. So you just got to keep that in mind. And also, if things get really bad economically for certain individuals, they don't care about what their portfolio looks like because they have more pressing issues. At that point, they're just selling anything they can to raise capital to pay for important things like food and shelter, right? So you got to keep that in mind. They're gonna put making their car payments way ahead of buying more Bitcoin. I mean, that's just the reality of it. And also counterparty risk. Counterparty risk is huge, and you got to be mindful of that. Don't put all your eggs in one basket. By that I mean, if you're on a sketchy high leverage margin exchange and that's your entire portfolio, just be careful, because when things get tough, some of these exchanges go under, or just like we've seen before, companies go under, they can't meet their obligations, and just remember, like anything else, don't put more than you can afford to lose in anything, and that includes all of your eggs in one basket. Don't put everything on one exchange. Just be mindful of that, because it's real, and it's and it can happen to anybody, even the companies you thought, oh, that could never go down, it's so strong. You just never know, right? You just never know. So just be mindful of those things. And last but not least, manage the mindset, manage the psychology. That's especially if you're an active trader. That's got to be the most important thing right now, because it's real easy to make decisions that are emotionally challenged and based and charged, where you're pressing, you're over trading. And so it's good to take a break. I have some videos here on psychology you can go watch, and just my thoughts on trading and risk management. And this is more important than ever before right now, more important than your strategy, more important than your technical analysis, managing risk and managing psychology, because you'll know when you shouldn't even be trading, and when sometimes it's just best to take a break and to step away for a little bit. And so just some thoughts there. I wish you all the best. I hope you guys have a good weekend, get some rest, take a break from the charts, take a break from the news and from Twitter, and go do something fun, enjoy some time with friends and family, and stay safe out there. I'll see you all in the next one. Take care, everyone.